Unicorn is an independent specialist fund management business. We focus exclusively on investing in UK equities. It is long only. We have a high conviction approach to all our portfolios, and we tend to invest for the long term. We currently manage around £1 billion of assets, and we are very much focused on the mid to smaller end of the UK equity market. Outstanding British Companies Fund, I guess, represents the purest form of what the Unicorn philosophy is. It is very high conviction in nature, with only 30 holdings currently. It is very long term in its investment horizons. Typical holding periods are at least 5 years. Many of the businesses held in the fund have been there from the launch of the fund in December 2006, so almost 12 years. And it's traditional, fundamental, bottom-up stock picking that is important to us. When considering whether a company is outstanding and suitable for inclusion in the Outstanding British Companies Fund, I look for 5 key points: simplicity, consistency, transparency, alignment, and permanence. Simplicity, I like proper businesses that sell products and services that add a real and tangible benefit to their customers. Businesses that I can understand. They tend to operate in niche sectors. They tend to have very strong competitive advantage because they're offering specialized products or services. In terms of consistency, I want to know for certain that a business has a strong track record of delivering consistent earnings growth, dividend growth, and of course, growth in revenue over time. And then moving on to transparency, it's very important for us that we can understand the accounts, that they aren't constantly cluttered with exceptionals or adjustments. A simple business tends to stick to its knitting and focus very much on delivering that earnings growth. And the way you do that really is by being transparent, and to be quite frank with you, I'm looking for businesses that under-promise and over-deliver on a consistent basis. In terms of alignment, we have always preferred to invest in businesses where the founders, the family, the management teams own and retain a meaningful equity stake in their own business post-listing. That alignment of interest ensures, in my mind, that the management teams will be more risk averse, that they will be focusing on cash flow generation, and that they will be able to pay dividends on a progressive basis over the long term. And finally, permanence. We're not looking for businesses that grow at a supernormal rate with the sole intention of attracting the attention of trade buyers or private equity. We invest for the long term. We want to be partners with those businesses over 5 years or more. I think it's become apparent in the 2.5 years since the referendum that most global investors have shunned the UK equity market, and as a result, on a relative basis, I think UK equities are cheaper now than they probably have been for many years relative to other developed equity markets around the world. That starts to make investing in UK equities look really interesting to me. Now, one could argue that there's still a lot of uncertainty surrounding Brexit, and perhaps it's a little bit early to go overweight on UK equities, but I do think that in the aftermath of a deal, whether it's a good deal or a bad deal on Brexit, I think it's likely that people will start to revisit the investment case for UK equities, and certainly for us, on a relative basis, there are an awful lot of interesting and very strongly managed businesses that are looking cheaper than they have been for a long time. The typical investment horizon for Outstanding British Companies Fund is at least 5 years. We manage a high conviction portfolio of only 30 companies, and it's important for us to make sure we do as much due diligence before making an investment decision, so that we have the confidence that those businesses can remain part of the portfolio for a long time. Style is not a consideration for us. In terms of the difference between value and growth, we are fundamental bottom-up stock pickers, and clearly most of our companies we'd expect to pay a premium price for that perceived quality. However, we are not focused too much on the difference between value or growth. For us, the Outstanding British Companies Fund represents premium growth, but at a reasonable price. Valuations within the portfolio relative to an historic sense are looking really quite interesting now. And that's because actually we had a very good 9 months to the end of September in the fund, and October was pretty tricky both for markets and for the fund itself. Prior to the start of October, valuations were potentially looking a little stretched within the fund. The fall in markets and the decline in the value of the fund over the course of October has actually been quite sharp, happened pretty quickly, and the fund itself, the individual components within the fund, are looking on a relative basis really quite cheap. In terms of my current view on the outlook for the UK, clearly, there's a huge amount of uncertainty. However, we are a trading nation. We're a nation of shopkeepers. We've been trading for thousands of years. I have no doubt that once the dust settles on this Brexit situation, that actually it'll be back to business and as normal. And I do think that we often underestimate the very high quality of businesses across multiple sectors. We're world leaders in so many areas, and for me, it's important that the government understand that the country get behind whatever the deal ends up being, and that we get back to business.